Hi, people. It's been an amazing week in Amsterdam so far. I'm happy, or I really hope that you aren't bored with all the fintech stuff already. But anyhow, so I'm Donny Kjellén. I'm CEO and one of two co-founders of the mobile banking and technology provider Tink. And just to give you a short, I'll briefly touch upon what we do. I'll talk about the same changes and opportunities about open banking that we see. But first, then a short recap on Tink. So Tink started off back in 2013 as a direct-to-consumer application in Sweden. Today, with 500,000 users. Today, I would say that 90% of our business is providing technology services to financial institutions, ranging from ABN AMRO, BNP Paribas, Nordea, to fintech unicorns as Klarna. We're a team of 90 people. We're all based in Stockholm. And, well, I think banking for the past, 2, 3, 4, 5 decades has been kind of a special environment. It's been probably one of the most illiquid markets out there. And I think that there has been a few distinct reasons for why we ended up here, and why the change with digitalization that we currently see, but also with open banking, is going to have, I think, enormous effect on it. So, I think that incumbent banks have had traditional few monopolies that has been very, very convenient. One has been the monopoly on viewing people's finances. The second one, the monopoly on transferring funds. And I think that if you have those two, then you're kind of the only one who can do advisory, at least mass market advisory. And as long as distribution was through the physical branch offices, that was something that was very, very hard to compete with. And obviously what is happening now is that it's kind of all going away. With open banking, you see that anyone can access account, anyone can make transfers, make payments, and distribution is becoming almost 100% digital. And I think that is going to have an enormous impact on this market. I believe that it must have been a dreadful time to be a banker with a market with so low liquidity. It basically doesn't matter whether you build fantastic products at great prices, because very, very few people switch banks. So it seems like, well, most people actually inherit their banks from their parents. So the only way to get new customers would then be to wait for current ones to mate, and 18 years from now you'll have new ones. And I think that in a new world with more liquidity, it's going to be more of a winner takes it all, but I think in different niches. A few years ago, Financial Times had the headline, "Banking is heading for its Spotify moment." And I think they referred to the point in time where an industry is completely blown away and replaced by something new. And I think that in banking, we've primarily so far seen efficiency gains within the existing distribution channels, the existing infrastructure, but we haven't seen the Spotify moment. But I think that open banking really has the potential of blowing it away and replacing it by something new. I'm going to talk briefly about what the Tink consumer application, what we do in Sweden, and don't care about Tink, but I think we could use it as a proxy for potentially what's to come elsewhere. And I'm also going to pick up on a few of these questions that I hear throughout Europe today about, important ones for whether open banking is going to work out or not. So the first one that I've heard was or I saw even an Accenture study in the UK saying a majority of people, they wouldn't trust a TPP, a third-party provider, with their bank credentials and with their bank data. And when Tink launched back in 2013, we did that by reverse engineering the non-public bank APIs, so basically creating post-PSD2 ahead of PSD2. So we presented a holistic picture, but we also helped people understand their finances, to do budgeting, goal setting, etc. The first 2 years, we basically only had negative press. So every security expert, privacy experts in Sweden made headlines about this was dangerous, you shouldn't trust them, Every single bank said it's illegal. You can be shut down from your bank service if you use any of these services. And obviously a lot of things has happened since then. And I must say I totally respect that we handled very, very important, this is an important subject for people. I mean, everything from privacy to security should make people a bit worried. And I think that just me coming one day and saying, well, give me hundreds of bank credentials or hundreds of thousands of bank credentials, that for most people that wouldn't be enough. Some people it would take 2 days to do their due diligence on Tink, but for other people it would take 2 years. Today, with 500,000 users in Sweden and being a household name, I think it's fair to say that it was possible to gain that trust. Not for everyone, obviously. There's probably 6 million adults, at least in Sweden. But I think we are in a way on something. Does that mean that every new TPP will eventually get that trust? No, but I think that the one that deserves it, that brings value, that deliver on what they say, that they make priority and privacy a priority, then I think it's definitely doable. What we did next, we went from being a read-only service to actually infusing payments through the same APIs. Basically, we're using the same APIs as the bank's own mobile app. We started to infuse payments, and what that made available was to pay your bills, to transfer money, and basically do anything that you previously did inside your bank app, you can now do inside Tink. But multi-bank, and what we believe to be with a nice user interface. And that was, the second question that you hear being asked, are people actually going to cord cut the bank? And what we see is that people are increasingly doing that. There's no need these days to go back to your bank app because you can do anything inside Tink. And I think that this poses an enormous opportunity also for existing banks to say, well, if you're an ABN customer, you can pay your bills from an IND account if you just plug it in. Thirdly, what we did last year was that we went from only doing advice like, this is how you should spend, this is how you should save, this is how you maybe over an overpriced product that you should be able to find something better. We felt this must be tangible. You must be able to act upon those advice. So we went out in Sweden and partnered with 5 different banks for savings accounts and mortgages. So we aggregate data not only about the payment account, we aggregate investment data, we aggregate mortgage data. That includes term structure, expiry dates, loan size, property value, etc. And that makes us be able to target these users with very, very specific, now you can save the exact this amount, and then we do the entire transferring process within Tink. So we do the KYC, we do the onboarding. And that used to be like a negotiation game. You need to go to the branch office, and then there's 30 pages of paper. And we made that digital instead. And I think that to the third question then, are banks going to become eventually dumb pipes? Well, when we started out 2013, for sure, no bank would ever partner with Tink because we were small. It could potentially be, hostile for the business model. But I think that at some point, when we grow, and today our user base has on aggregate 25 billion euros in mortgages. It's a significant amount, and we can see exactly how that is priced, and I can say it's not a beauty history or a beautiful graph because it's been negotiated in each local branch office. So when you then do the math on it, then you understand that this is going to be completely reshuffled when this goes from human to a digital process. But that also poses an enormous possibility for a bank being the first one to give targeted offers to the one that is currently overpaying with competitors. I don't think that they at all believe them to be dumb pipes. I think they believe them to be the smartest customer acquirers ever. And I would agree with that. Because just as people are now talking about is GAFA going to take over? Who will provide mortgages for Amazon? Is that a threat? And I think that if when the day when Amazon comes and say, you know, I want to have mortgages for a few million customers in Europe, I would be very surprised to hear that bank that says, I'm not interested. And I think that the same happened here in Sweden. In the beginning, no interest. When the opportunity was large enough, then I want to do it. And I think that this is the smartest, cheapest, fastest customer acquisition channel that these banks have today, rather than doing, I don't know, off-site, or TV commercial or print ads, or what would you do? Well, and looking then at the future, where do I believe that this is going? I think that I would want to put money on autopilot. I would love to be here and do like an Elon Musk performance and say, did you know there's an autopilot built into Tink? I think that finances will become increasingly easy. And I got a question the other day, said, well, aren't you afraid that people won't even understand finances? They won't know the nitty-gritty. And well, I really, really hope for that to happen. I think that finances today is way too complicated. Obviously, an autopilot, I think, will be very different for different people. Some people would just say, turn it on and make sure that I have the best interest, best mortgage rates, best investment strategy. And some people would want to have a lot more details. For banks, I think that this means an increased liquidity in this market. People will actually start moving and transferring bank, which means that the position as the second or third largest / best universal bank in the market, which has been a very, very comfortable position for the past few years, I think that's not going to be enough. I think that one needs to pick a segment and win it. And I think that a winner in these segments will have the vast majority of customers in that segment, and 2, 3, 4 will have a lot less. I think we see that a move from the universal banks to more of a niche products. Anything from the cheap Charlie of banks to the Gucci or Apple, where it's like a lifestyle brand and you overpay and you just love it. I think most importantly, I think that this new technology is unlocking an opportunity of a lifetime. We see that when we partner with our banks, that open banking gives an enormous possibility to kind of channel unsatisfied customers that's currently with their competitors to their offerings. I think even in the future that all digital bank offerings will be bank agnostic. I don't think there's any reason to discriminate and say only if you have a current account with my bank you're allowed to use my digital services. But I think it's going to be just plug in whatever bank account to it, and that digital services will be, one, make sure you have access to the correct set of data, then use that data to help people understand their finances, dig deep for some, autopilot for some. Use that data to understand your customer, to be able to do data-driven advisory, and then 3, to pair that with product sales. And I think that the one that gets that right will be in a fantastic position. That was all for me. Thank you.